Hello and welcome to South Australia's only online monthly property report. No adverts or brand push, just helpful information, forecasts and tips for people working in or interested in real estate. In the next 6 minutes we'll answer the question, how's the March real estate market in South Australia, and then what's this mean for you, before moving on to a few tips on how to take advantage of the latest market conditions. Recent world events and Australian disasters have increased the conservative mood of the Australian property buyer, decreasing the number of properties sold in recent months, and at the same time doing this while property has come onto the market in unprecedented levels. An example of this can be seen in the figures from the Australian Bureau of Statistics, which showed in January that despite the average Australian household's disposable income increasing during the last quarter, we are now saving almost 10% of it. Now, this level of saving hasn't been seen in Australia since 1989. The good news is, as a result, interest rates are now expected to hold even longer than previously forecasted. Rate increases previously predicted to start around April are now unlikely to be seen until much later in the year, if at all. Current stock levels are still favouring buyers. From September to February, new property for sale literally poured onto the South Australian market at a level we haven't seen for at least 3 years. At the same time, buyers became increasingly conservative, particularly over the traditionally slow holiday period and in the wake of a wave of natural disasters that hit the eastern states. As a result, price growth has stalled, slowed, and in many cases slipped backwards over the last 3 months. We are still waiting on the release of figures for the last quarter by industry monitoring organisations, but understand from initial reports that property pricing reduced in all capital cities, including Adelaide, over the last 3 months, and we expect similar reports for South Australian country regions. We know, for example, that Adelaide prices, despite increasing overall year on year, actually dropped in the January quarter by 1.3%. It will be of little consolation for sellers over that period that this still made Adelaide the best performing capital for price in the country overall. I can also confirm that in recent months, the rental vacancy rate in Adelaide has dropped alarmingly by a third, from 0.9% to just 0.3%. So what does the future hold? More pricing slowdown or price growth? Organisations such as the Australian Property Monitors, rhSA and RP Data are suggesting, based on current conditions, that the overall Australian property market will return to growth in the second half of the year. In South Australia, we're already seeing this beginning to occur with the start of March. And during the last 2 weeks, for example, Rain and Horn's Salisbury, North East, Ingle Farm and Oakbank offices reported substantial increases in sales and buyer inquiry, and no signs at this point of that abating. Australian records show historically that while September is the month when the most property comes onto the market, it's March when the most property sells. And we're certainly seeing that pattern continue in 2011. 2011 is also predicted to be a year of stabilisation and modest price growth for most capital city housing markets by APM senior economist Andrew Wilson and many other leading independent analysts. And Adelaide will remain the country's most stable market for consistent price growth. So what's this mean for you? If you're a buyer, I can't emphasise enough, now is a great time to buy. Prices are low, vendors are realistic, not desperate, interest rates are stable, and the economy is strong. Now, in these video updates, I present facts and realistic information and avoid sales pitches or product push. But I think it is relevant to give some evidence of what I mean on this occasion with a couple of examples of exceptional value, as the current market has produced a few pockets of affordable, life-changing opportunity for buyers that won't be repeated as the market comes back into balance. Land buyers, first home buyers and even astute investors are able to purchase blocks of quality land in the picturesque lifestyle development of Aberdeen Park in Strathalbyn for as little as $119,500. Builders too are adjusting to current market conditions and offering exceptional value that is unlikely to be seen in coming months. We now have estates with quality house and land packages available for $299,000. And these are quality homes on beautiful blocks. Buyers looking for established property can find exceptional value with a bit of research, like 53 Shulpin Road in Somerton Park, Now, this is a beautiful 3 to 4 bedroom property on 710 square metres of land within an easy stroll to the Glenelg Esplanade. Property comparable with Chopin sold in Somerton Park during late 2010 for $750,000 to $760,000. But in the current market, Chopin is available for $695,000. These aren't good buys, these are great buys. And in addition to the lifestyle they offer, these properties will increase significantly in value in the coming months and years. So as a buyer, buy now. Sellers, if you're selling in order to buy, now is a good time for the reasons I've just mentioned, especially if you're upsizing. For example, if you're selling a $400,000 property to buy a $550,000 property, then you have less to lose and more to gain in the current market conditions. You see, in most cases, when property prices in general increase, a low-priced property price will increase only a little. But proportionally, a higher-priced property will increase in price a lot. Similarly, if prices drop, it will affect higher-priced property much more so than lower-priced property. For example, a 5% drop on a $400,000 price tag gives a $20,000 saving. But a 5% drop on a $600,000 price tag gives a saving of $32,500. So there's a lot of gain to be made. So when strong price growth returns this year, these gains will rapidly diminish if you hold off on buying. However, buyers and sellers, let's keep this all in perspective. We are lucky to live in Adelaide, and price drops here are typically very small and very, very rare. Steady, reliable price growth is the norm we are known for and envied for by the rest of the country. If you're currently selling, listen to your agent for both buying and selling advice. He or she will be able to best advise you with respect to your local area conditions and circumstances. For people renting or looking to rent, the South Australian rental market at 0.9% was extremely tight. Rent rates increased, competition for a place soared, and vacant rentals are less than 1 in 10. Now in January, rentals dropped from 0.9 to 0.3%, and as I keep saying, it isn't going to get any better. My advice to people renting right now who one day wish to get into housing is to make an appointment today to talk to a finance broker this week and at least get an idea of what owning your own property will really cost you. It can often be a lot less than you think, as perhaps evidenced by the increasing trend of people buying investment property who are actually renting themselves. Well, that's the indicative SA market report for March 2011. If you have a question you'd like answered in our next broadcast or sooner, contact me via Twitter at rhSA_CEO or email at kevinm@rhsa.com.au. Or talk with one of the friendly team at your local Rain and Horn office. Thanks for tuning in, and until we catch up again, I hope you enjoy good things.